specific action to track for you, and we'll get to our special top 10 segment in just a bit. We have a whole host of stocks. You have IndusInd Bank, Persistent, Oracle Financial Services, Vedanta, Oro Pharma, DRL, and Mahindra Lifespace Developers. Those are stocks on the back of positive news flow. On the flip side, you have Adani Enterprises, Shilpa Medicare, and Rallis. That are stocks that could react negatively.
Okay, all right. Cameron Brandt is now joining us. He's Director of Research at EPFR Global. Cameron, great to have you with us here. Thank you very much for your time. Emerging market ETFs, Cameron, I was looking at the data, they're getting inflows. India ETFs are also getting inflows. But when we get this daily flow number, foreign portfolio flow number, that's mostly on the negative side here in India, has been in 2023. What's going on?
What's going on is a great deal of uncertainty, but flows in general are tilting towards emerging Asia. In the fund universe, India's fund industry is benefiting from strong domestic demand. The foreign domiciled India funds, as you've just noted, aren't doing so well. But I expect that to get better in the next few weeks. We're starting to see the global emerging markets funds, the diversified ones, take in some serious money, so 2 to 3 billion a week over the past few weeks. And they're very keen on India at the moment. India was one of the markets who saw their average allocation with that group rise the most last year. So I'm expecting that number to turn a bit as we go forward.
I think that was your view the last time we spoke as well, Cameron, where you did say that GEM funds are getting a lot of money, and a lot of that money is getting allocated into markets like India. Even Brazil is seeing some allocation as well. But as we head into perhaps what could be a global recession led by the US, how do you see these flows shape up? Do you see India get an outsized amount within the emerging market basket? Where does the preference lie?
Well, certainly those GEM funds, stick to them for a minute, have significantly cut their exposure to China over the past 2 years. China's gone from about a third of the average portfolio to a quarter. So you have both a China allocation and a Russia allocation that is being channeled elsewhere. And I think India is well positioned. It checks several of the boxes that are driving flows to individual markets. It has a technology story. It's part of the supply relocation story. And in relative terms, the forecast for its growth in this coming year still look pretty good relative to a lot of the alternatives.
All right. Hi, Cameron. Good morning. Could you give us a couple of numbers? What was China getting as a percentage of global equity funds, if you do have that, say 6-8 months ago? And has that allocation gone up? Because various reports indicate that China is getting a substantial amount of flows in comparison to earlier. And what has that average been in the past?
China is getting a substantial amount of flows, but they're going directly into dedicated China equity funds. There is certainly a broad sense that partly because China was held back so aggressively for so long with its zero COVID policies, that its rebound story is a no-brainer, that it will certainly happen by the second half of this year. But the positioning for that is occurring more in dedicated funds than it is in the diversified funds. So we've seen allocations to China sort of move somewhat sideways for the past few months. But as I said, at a significantly lower level than we were seeing even 18 months ago.
Cameron, you said that diversified emerging market funds have been getting a couple of $1 billion for the last several weeks. Could you give us a number? I mean, if you have that. For the last, I'm assuming you have data for the first 2 weeks of this year, right?
I do. Well, let's see. I expect them in this coming week to be somewhere around the 3 billion mark. And in the last reporting period, they took in 2.8 billion. That was up from sort of around 1.5 in the last couple of weeks of
So in aggregate this year, the data that you have is about plus 3 billion.
A little more than that. I think it's heading closer to 7 or 8 billion.
So, okay, 7 or 8.
Yeah.
Okay, and
in aggregate.
In aggregate. No, so the point is when ETFs get money, they have to deploy it, right? I mean, immediately. There's no. But
yes,
these funds can, and this is passive and both kinds, right?
Yes, this is the big 10 number.
Okay, and they can, and you're saying that some of this money will start to get allocated in the coming weeks. That's what you said.
Yes. So, I think you will start to see an impact from this influx. And as you say, since a decent chunk of it is going to ETFs, that impact will be sooner rather than later.
All right.
Okay. All right, Cameron, we leave it at that. Thanks a lot for joining in and giving us a sense of which way the flows are headed. That's EPFR Global saying that a lot of the global emerging market funds and diversified funds have been keen on India, so that's where the money could flow. Let's do one thing. Let us take a quick break. On the other side of the break, our list of top 10 stocks is coming up with our entire research team. Don't go anywhere.